Right, 28 minutes to go till closing bell and the long weekend. You've got the Nifty trading along the flat line, 17,362. The Sensex also trading in the green by about 30 points in trade. Let's get you one of the big interviews that we had in the day today. Edelweiss Wealth Management now has a new boss, and he was exclusively on ET now. I'm talking about Ashish Kehair, who's going to be leading Edelweiss Wealth. Here he is in conversation with my colleague Ajay Sharma.
Importance perspective, I think this is one of the most integral components for Edelweiss. Obviously, Edelweiss has the practice of seeding businesses over the years and helping them grow. So some of the businesses within this team have been seeded, 10, 12, 13 years back. And this is the time when we've achieved the market leadership position, and it is paying back. So overall, in their scheme of things, or in Edelweiss scheme of things, it has become extremely integral and important.
Ashish, also we are in a time of very buoyant capital markets, and we are seeing how asset management and wealth management businesses are being re-rated. Many of the new IPOs are in the line as well for similar businesses, and the existing ones are getting re-rated because there's a tsunami of flow which is coming in, and the Indian savers' newfound love for equity is being observed, which was earlier way more tilted towards real estate or even debt or FDs actually, I would say. When your team members interact with affluent clients across the country, among the new ones, what are your observations on ground?
So I think you're bang on. Again, there is a lot of history to this, multiple reasons. People have not made money in real assets over a long period of time. Digitization, ability to do transactions in a seamless way in capital markets, interest rates falling down structurally. If you remember, 15, 20 years back, a good standard bank FD could have given north of 10, 12%. Capital markets were not so fully developed. Dematerialization was not there. It was a pain. So I think multiple things have fallen into place. Savings of people have grown. They have observed the West. So what you're seeing actually is culmination of all that coming together. Obviously, capital markets have their cycles. They have euphoria, they have depression, there are air pockets. Right now we are in a phase, and the only thing I want to caution the newcomers is that they have seen one side of the cycle, because most of them, or many of them, not most of them, would have come in post, let's say, the advent of COVID. So I would basically urge caution at this point in time. But this trend has changed, and with 150 lakh crores sitting in bank deposits, there is a long journey ahead for us.
Right, clearly that's the pot which you and your peers are actually eyeing, and understandably so, because after all, when the money moves into productive assets via capital markets, the chances of returns are much more better. How is the momentum of your business, Ashish, right now? Do you see meaningful growth in the business and in the realizations? I was just looking at your FY21 numbers as well. Do you see the momentum continue for next couple of years? Has the business got potential to say double in the next 3-4 years with improved realizations? Because I see a lot of new initiatives being planned at the company, new funds, new category of funds overseas, and all of that, helping Indians invest abroad, all of that. Does that seem to be a potential? Is that a fair estimate?
I would say, yeah, you've been conservative, Ajay. I think the way the Indian investor landscape has changed over the last 5-10 years is dramatic. The amount of savings that have come into the hands of people, and at the cost of belaboring, the lack of reasonable returns in traditional avenues is basically pushing us through. So the way I see it, essentially we are structurally in a reasonably long-term bull market for this business. But you have to understand, anything which has to do with capital markets doesn't move in a straight line. It moves up, it comes slightly down because it is governed by emotions of people. So we will face those turbulent times ahead. But if you ask me from a 3, 4, 5 year perspective, do I see doubling? I can, in my reasonable estimates, I am seeing actually far higher numbers than that. I could actually see a tripling of incomes for people who are executing well in this space over the next 5 years.
Ashish, let's talk about how the business is in terms of competitive forces. We are seeing a surge of new AMCs coming in, technology-backed, quant-backed models which will be running and powering the passive wealth management models. Many of them are on the anvil, which you know about clearly. They, along with them, would also be bringing down the costs and hence the fees of asset management. How will that really play on traditional tilted asset management or wealth management companies such as yours, because costs overalls and commissions and margins will come under pressure because passive is becoming very becoming mainstream among the millennials and the costs are very low on all of that. So how will it impact realizations of your business?
So I think it will help bring in a lot of new investors into the market. So the way I see it, costs coming down, regulations becoming tighter actually helps all the players in the long term. It obviously feels painful in the short term because there are compression in margins, but the positive fallout of that is a large number of new investors actually start hitting the market, because the benefit which these players will bring is that they will reach out to a client segment using alternative channels or digital channels which were not used effectively by the traditional.
Okay, that's the word coming in from Edelweiss Wealth Management. In the meantime, take a look at the markets. We're still absolutely quiet. In fact, completely flattened out for the index now. 17,366 is where we're currently at. Kunj Bansal as well joins in on the show. Kunj, hi, afternoon. While we're definitely excited for the long weekend, but just wanted to understand what is it that you're making of the market temperament